Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. And today we're back with Rick the Ruler. How you doing today?
Life is good, Daryl. I hope it is for you as well.
Yeah. Speaking of the rulers, we had the No Kings protests everywhere and everything, and so there's some concerns about rulers these days, and so but I know you're coming with a different perspective.
Well, I sort of agree with the No Kings thing. I don't believe that the target of those demonstrations, which is to say the economic oligarchs, deserve any government subsidy.
Yeah.
But I don't think they're the real oligarchs. I think the
Yeah.
real oligarchs are 535 people in Congress. I think it's very richly ironic to hear the burn. By the way, I feel the burn in my wallet and other places. I would argue that they're the real oligarchs, that they're the real kings. I hope that the protests continue, and I hope that the protests begin to identify who the real kings are, who the real oppressors are. I go on shows like yours so that I can use 72 years of experience to ask the questions in society that need to be asked, that are seldom asked on mainstream media.
Mm-hmm. Yep. Yeah, for sure. Yeah, and that's something we're gonna get real, let's get real. That's what it's about. And when I mentioned different perspective, I know you have a different approach. That's what I meant. But the so when we're thinking about we had a lot of things pop off. I mean, the whole thing with DOGE just came crumbling down, which we've talked multiple times on about. I mean, you even interviewed David Stockman on and went through the hard numbers on there. And then we saw a flare up between Elon and Trump and everything. And so and so the writing was on the wall there, but and then we began to see, like, I guess a divide between Trump loyalists and Elon Musk loyalists and stuff. So it's just a crazy shit show. Uh, you saw the writing on the wall. You've seen this happen before. You've seen this ending to this movie before. What was kind of your perspective when that news came out? Hey everyone, I encourage you to click the link in the description below to the Rule Symposium. We are currently interviewing Rick Rule himself. This symposium provides a lot of value that we're going to share more about later on in the interview, but I want to encourage you to click the link because even if you cannot attend in person, you can attend online, and you're getting 55 hours of programming and material from experts all over the world, experts such as Danielle DiMartino Booth, experts such as David Stockman, who ran the Office of Management and Budget under Reagan, experts such as Nomi Prinz, and many others. And so I encourage you to click the link in the description below to get your ticket to the Rule Symposium now. All right, back to the interview.
That's just prologue. I mean, we discussed it in your show. We discussed it at length in our symposium last year. There's a wonderful quote. I think it was Gore Vidal, hardly a conservative, by the way, who said that you can understand the process of politics if you understand the root of the word. Poly is from the Greek for many, and tick is from the English colloquial for small blood-sucking insect. If you think of Congress and the voters, frankly, as being a bunch of small blood-sucking insects, you understand the process. Going back to 1980, Ronald Reagan was elected president with a huge plurality, not a small plurality like Trump enjoyed, but a huge plurality. And his whole campaign was cut the size of government, reduce government, get the yoke of government off your back. And that resonated with Americans, rich, poor, yellow, black, brown, white, resonated with Americans. Despite that, the political interests of Americans represented in Congress, Democratic and Republican, derailed the Reagan Revolution within 6 months of Reagan's inauguration. um, the people in Congress are elected by us to maximize our benefits at the expense of other parts of society and minimize the call that other parts of society have on us. That means that they have an intrinsic interest in increasing expenditure. And the class that gets penalized the most is the unborn. And that doesn't change. Department of Government Efficiency was always theater. Always theater. How has it worked out? Well, let's look at the first Trump budget. First of all, we scrapped the debt ceiling. If you're going to reduce debt, why would you scrap the debt ceiling? They proposed the fourth largest deficit in history, but even that was smoke and mirrors because the savings come 4 years from now, while the expenditure comes today. Department of Government Efficiency allegedly identified $160 billion worth of fraud. Daryl, have you seen any indictments? Fraud is an indictable offense. If there was $160 billion in fraud, where are the indictments? If there was $200 billion in savings, why are the deficits where they are? This was and is theater, pure theater. Now, it's interesting that on the Democratic side of the aisle, that they are attacking several items of the Trump budget in terms of expenditure. Does this mean that the Democrats are anti-expenditure? Of course not. It means they want to spend it on their shit, not his shit. And what does all this mean for you and me? What it means, for reasons that we can discuss later in this interview, that is to the extent that you're counting on the rest of the world to look after you, you got to change your thinking. You got to look after you. The decade that we have coming in front of us is going to be a lot different than the 4 decades that preceded this one. And the way that you prepare for it, the way that you deal for it, the way that you save for it, the way that you invest for it is going to have to change. That's very, very important. Things are changing, and you can't rely on other people to fix that for you. You got to fix it for you. I think that your motto is what? Save, invest, prosper, something like that. That's what it's about for the next 10 years. It's not coast, relax, spend. That's not what it's about.
Hmm. Yeah, yeah. It seems like we're even looking at the macro with the end of the bond bull market, and after the 2008 crisis where the Fed just printed, and you could kind of ride and relax, ride the equities on the way up. And now there's a lot of volatility. Inflation has, still stayed pretty sticky, and there's concern that if interest rates come down, that inflation could continuously go up, and then tariff concerns. So there's like multiple competing forces at play here. And so it's definitely not a easy way to just coast.
Well, Daryl, you said so many things that impact the way people live. Let's unpack some of that. Let's talk about inflation, first of all. Most folks that don't wreck their life the way I wrecked mine studying all this stuff, folks that have lives, they think that inflation is measured by the CPI, if they think about inflation at all. If you believe in the CPI, it suggests that inflation is 2.5%. Now, my definition of inflation is the deterioration of the purchasing power of the US dollar. That is, the fact that my savings and my salary buys less and less and less every year. Simple common sense, knowing your household budget, period 2020 to 2025, gasoline prices have almost tripled. I don't know what your property tax bill is, or your sales tax bill, or your income tax bill, or your capital gains tax bill, or your fuel taxes, or your excise taxes. But the idea that your tax take has only increased by 2.5% a year since the year 2020 is stupid. Uh, Home mortgage rates have doubled. Health insurance rates have doubled. Grocery prices are up 60 or 70%. And these morons tell you that the deterioration of your purchasing power is 2.5% a year. So it's important that your listeners understand that the CPI is a CP lie. And that has profound implications. Not you, Daryl, but one of your older relatives, somebody who's more my age, and they're making, they're 70 years of age, and they're expecting to live to 85 or 90 or something like that. And they believe that given their savings, that they're okay with their Social Security. They're planning on Social Security. The problem is that while they likely continue to get Social Security, inflation means that their Social Security check will buy them less and less and less. Now, there's nothing you can do about it, so there's no sense fretting. But what you can do is save more, postpone retirement, invest better. This coast thing in the period 1982 to 2022, these were the most benign periods in economic history. Real interest rates fell, nominal interest rates fell. The stock market went crazy because of the baby boomer demographics. That was great, especially great for folks like me who really benefited from it. But all that's changed. So to the extent that your expectation of the future is predicated by your experience in the past, you're going to have a hard time for the next 10 years. Very, very, very hard time. And you can't just curl up in the corner in fetal position and say, I quit. You can't do it,
Yeah, for sure. So thinking about that, the one thing that I've been thinking about is, the issue of retirement, which, I do think we have a retirement crisis, and we don't have to spend a lot of time here, but um, thinking about that in terms of, planning for the future. So like for me, I have, my retirement stuff going, Roth, pension, things of that nature. And then I have my precious metals, my gold, and then I have like my investment accounts.
Yep.
Um, and I'm kind of wondering, like, how realistic is retirement, And so that's something I want to get your
let's
perspective on.
let's do the arithmetic around it, okay? Let's do the arithmetic around it. Let's start with the premise, and I'll defend this later. Let's start with the premise that very much like the decade of the 1970s, in the next 10 years, the purchasing power of the US dollar will decline by 75%. That has two implications. You're not an old codger like me yet, but if you are an old codger like me, I don't know what Social Security pays me, 4,000 a month, 4,500 a month, something like that. They're not going to change that. They're going to keep paying me, but it's going to buy less. My $4,000 today will buy me $1,000 worth of goods and services 10 years from now. So when you look at your retirement benefit, if you're going to get 4,000 or 5,000 a month, understand that that'll buy you 1,000 or $1,200 worth of stuff in today's dollars. So you're likely going to have to augment it or supplement it. On the other side of the equation, you are going to have to look at investments that do well during periods of time when inflation goes up and interest rates go up. If you'd bought a triplex in 1970, what happened was that your rents rose, but your mortgage went from 5% to 16% over 10 years. And if you had to refinance, if you didn't have fixed rate mortgages, even though your rents rose, you may have lost that triplex in the decade of the 70s. So you need to make sure, as an example, with income producing real estate, that either your financing is fixed, so it can't rise, or else your real estate is unique enough that you can raise rents fast enough to compensate for rising interest rates. And you need to look at asset classes that benefit from inflation, gold, of course, being one of those. It's important to note, Daryl, that's not the only way up the cliff. In the period 1968 to 1982, There was a 14-year-long bear market in equities. It was truly ugly. I was in it. Young stockbrokers watched their business get smaller every day for 14 years by a little bit. You know, it was really unpleasant. But then there was this guy invested 100% in stocks. His name was Warren Buffett. Because he picked stocks wisely, because he ignored the popular narrative in favor of doing his own work, he made 22 or 23% compounded every year for 14 years when the stock market went sideways to down. So there are ways. There are skills that are in short demand, where demand will be growing over the next 5 years. And if you teach yourself to employ those skills, the amount of utility that you generate for society will increase at a faster rate than inflation. But if you coast, it's not going to be pretty. It's truly not going to be pretty. And that's, that's why I talk on channels like yours. People need to develop communities of like-minded people so that they can help each other through the next 10 years. You're not going to be able to rely on Democrats or Republicans or Congress or the legislature. You're going to have to you're going to have to rely on your customers and your friends and your family, people like that. It's critical.
Yeah, for sure.
Man, I'm not supposed to say this on a show like ours, but I'm going to say it anyway, precisely because I'm not supposed to. If you go on X, if you listen to that great big conversation like Twitter, I mean, I didn't realize this, but apparently if I listen on X, every waking moment of your life, because you're black, you're trying to find a way to kill me because I'm white. Except that's not the way my life works. I mean, you got a few black folks who are morons, and you got a few white folks who are morons. So don't exclude black people, don't exclude white people, exclude goddamn morons.
Yeah.
And this hate that is inspired by a few people manifests itself in Congress. It doesn't manifest itself rationally. It manifests itself because people get elected exploiting other people's fears and exploiting other people's frustrations. And you can't allow a circus like Congress that maintains its power by exploiting the worst aspects of our personality to control our relationship with each other. Your relationships are with your customers. They're with your friends. They're with your family. And it's important that we all get back to that.
Yeah, that's good. That's good. I mean, and that's conversations I've been having with people that I'm close with, and just understanding me. I do a lot of research on like human psychology, and um, which hasn't changed, for centuries, millennia, right?
Right.
And and you see like the same on both sides of the aisle. You see the same cancel culture tactics. You see the same the othering of other people and
Right.
only wanting to tribalize with your own group that has the same like-minded thinking and such. And so like for me, one thing that I've been really, really thinking about is like how do I build bridges? Like having like-minded folks that have a similar understanding, but also knowing that everyone's not going to agree with me on everything, right? And so like,
Which is okay.
yeah. And so like
I mean,
creating space for that.
markets are a forum for disagreement.
Yeah.
Somebody thinks their stock is worth Y. I think it's worth X. If X is higher than Y, I buy it from them.
hmm Yeah, for
So,
sure.
but about 9 months ago, I had the good fortune of meeting your son.
hmm
Now, he and I should disagree on everything, right?
Yeah.
Young, mixed race, striving, old, white, rich. What does he want? He wants to be happy. He wants to thrive. He wants respect.
Yeah.
That's what I want.
Exactly.
The idea that all these artificial gaps control our lives and our relationship. My job is to find something to sell him,
hmm
and his job is to find something that sells to sell me.
Yeah.
Is to ignore all this stuff that's counterproductive. And
hmm
I'm not picking just on the black white thing. I'm picking on everything that suggests that getting ahead isn't a function of fulfilling other people's needs.
Yep.
That's what I'm suggesting.
Yeah, for sure. I mean, you know, and it's really like, you know, we have basic core psychological needs, and every human has them, you know, from babies to, you know, you could be a lot older.
Right.
You know, and regardless of what background you have, you're from. But, you know, like you mentioned earlier, there are people that are exploiting that, you know, and you know, exploiting the fears of others and things of that nature, which we're seeing a lot of that today. Like there's, yeah, it's pretty interesting. But I want to go back to gold. So gold has it cooled off a little bit, bounced back, especially after this Israel-Iran thing. And man, it's like really a hedge against chaos. But then now we're seeing the like we talked last time about gold royalty, and you know I was like, why is this thing moving? It's like you see wheat and precious metals and Franco Nevada, they're moving. I'm like, Rick, why is gold royalty staying still? And then I think it went up like 50% in the last in the last month or so. And so where you think you think gold is just going to continue to go higher? Is it still mispriced? What's your take there? Hello, everyone. This video is sponsored by Power Metal Resources. I'm excited to introduce to you an opportunity of a lifetime with this company. As you may know, we are currently in a broader commodities bull run. We've seen gold rally 26% in 2024. Uranium prices surged significantly since the COVID lows, but some may wonder, are these upward moves over? I argue, no, they are not. In regards to gold, central banks around the world are continuing to buy gold to hedge against the weaponization of the dollar. We also have global debt and deficits that are ballooning to astronomical levels with no signs of slowing down. These factors indicate continued upward pressure on gold prices. And we haven't even mentioned uranium, so there's a huge supply and demand gap of about 26 million pounds currently, and future projections show that these gaps are expected to widen year over year for decades. Prices in uranium must increase to incentivize more production, and I haven't even mentioned the clean energy demand. Major tech companies such as Microsoft, Google, Amazon, they are investing in nuclear energy to power their AI data centers. And lastly, we have countries around the world that are setting carbon net zero goals. And there's a massive gap between these goals and the supply of these critical minerals such as rare earths, nickel, copper, and many others. And these minerals are needed for building electric vehicles, powering renewable energy grids, as well as supporting AI and tech data infrastructure. So Power Metal Resources is a way that you can get exposure to many different metals. They have a global portfolio in different countries such as North America, Saudi Arabia, Oman, Australia, and Africa. The projects are developed internally or through strategic joint ventures. When ready, projects are either sold outright or listed on recognized stock exchanges. This strategy crystallizes value from their exploration and development work. Now, when we talk about valuation of this company, the net asset value of this company is approximately $52 million. They currently have a market capitalization of $25 million. This means that the shares are over 50% cheaper than the valuation of their assets. And this doesn't even account for the expected price increases in the commodities bull market. So in short, Power Metal Resources is positioned to capitalize on these long-term trends. I encourage you to visit their website, powermetalresources.com. You can find them on the London Stock Exchange under ticker POW or the OTC market ticker POWMF. This is not financial advice, and please do your own research and due diligence.
Yeah, let's look at history, okay? The last time we had a period of rapidly declining US dollar purchasing power was the 1970s. In the 1970s, the US dollar lost 75% of its purchasing power, and gold ran 30-fold. 30-fold, okay? Now, I'm not suggesting the next 10 years that gold runs 30-fold, but I am suggesting in the next 10 years that gold loses 75% of its purchasing power again. And well, I don't know, and you've been interviewing me long enough to know I don't know. I suspect that the increase in the gold price will mirror the deterioration of the US dollar, its purchasing power. That means that gold should rise threefold or fourfold. Let's say I'm wrong and it doubles. That's not a horrific outcome. And armed with that knowledge, which is to say, at least the nominal price of gold rises for 10 years, that meets the definition of a gold bull market. And gold bull markets follow predictable patterns. In the early stages of a bull market, what moves is gold, not the gold stocks. When you first started interviewing me, you expressed your viewers' frustrations that gold was moving, but the gold stocks weren't. And the explanation I gave to you is, first of all, this is the way history works. But secondly, one asset class, gold, had a buyer, foreign central banks. And foreign central banks don't buy gold stocks. So if one asset class has a buyer and the other asset class doesn't, of course, the one that has a buyer goes up. And that's what happened. Like earlier bull markets, the momentum established by gold eventually spills into the gold stocks. It does that for two reasons. The move in the gold price validates the narrative to investors. They get interested in gold as a topic. But the second thing that happens is as the gold price increases faster than the input cost to produce it, the companies make more money. And we've seen that just in the last 15, 16 weeks. We've seen solid inflows into gold or ETFs. And the buying has been concentrated in the best of the best, the Wheaton Precious, guys like that. When that momentum establishes itself, courage and cash goes down the value chain. And that is what you saw in gold royalty. And that'll continue.
Mm-hmm. Yeah. And Benjamin, who does the ROI channel, which we've done interviews with them, and looking forward to being there with all both of you at the symposium. He's been calling for like the royalty and streaming companies for a while, and he was just spot on with just like that whole business model, and being able to have less risk, as well as being able to benefit from the upside of gold and such. And so, yeah, he definitely was on that, and I was like, yeah, Benjamin was spot on. I mean, you've been mentioning it for a while, but yeah, he was.
Focus on that less risk part. Royalty and streaming, you don't have a capital risk because you don't have capital expenditure, and you don't have an operating risk because you don't pay the cost. And early in a bull market, when people are still scared, the royalty and streaming companies outpace because they're afraid of downside risk. And the royalty and streaming companies, unless you pay too much, don't have downside risk.
Yeah, for sure. And so in the 70s, obviously, gold went 30-fold, but gold was also like capped at I think it was $35 an hour, $35, I was about to say an hour,
Yes, sir. Yes, sir.
$35 an ounce, for a long time. And so, it kind of had to find this floor because it went to like some uncharted territory and such. And we're still there now. I mean, because gold is at an all-time high priced in dollars, but we're still like in uncharted territories. And so, has gold reached the inflation adjusted price yet in your measure in your metrics?
I think not. Um, and I don't think of gold in isolation. I think it in juxtaposition to the US dollar and the real US dollar interest rate. The best way to answer that question, Daryl, is gold fully priced, is what set of circumstances would cause me to sell my gold? How would I identify it as overpriced? I own gold because I believe debt and deficits in the US are out of control and will lead to the deterioration in purchasing power of the US dollar. So what would cause me to sell my gold? Well, the first would be a balanced federal budget. We're $2 trillion out of budget and getting worse. The second would be a sane fiscal plan for dealing with $100 trillion in net present value of entitlements. We're a long way from there. The third would be declining real interest rates. And that's tougher to explain. A real interest rate is the plurality of the 10-year Treasury yield to the underlying rate of inflation. And this is the subtle part. Right now, if you believe the CPI, you believe inflation is 2.5%. The US 10-year Treasury rate is 4.5%. So you're getting a 200 basis point real yield. But if you believe like I, that the underlying rate of inflation is 7.5%, you're getting paid 4.5%, it means that you have a minus 3% real yield. So for me to sell my gold, I would have to have a 200 basis point real yield to underlying inflation, which is to say that the US 10-year Treasury rate today would have to be 9.5%. If that's true, the first mortgage rate would be like 11%. If you look at all of that arithmetic, but particularly the real interest rate uh, differential, you see that from my point of view, the reasons for me to own gold are very much intact. I'm not expecting gold to increase in price in real terms in the next 10 years, although it might. It might be because of the human psychology you talked about. It might be it might be that the increase in the gold price causes people to overvalue the narrative and they buy too much. But all I'm counting on is that the gold price will mirror in nominal terms the deterioration of the purchasing power of the US dollar. It will maintain its purchasing power today in a currency that declines by 75%.
Yeah, yeah, for sure. Okay, that's really good to know. So now we know when Rick would consider selling his gold, you all. So and that's some good insight. All right, so just pivot into silver. Silver, I mean, I think it almost got to $37 an ounce. Um, and there's been extreme volatility in the recent months. I mean, it went to 30, 35, dropped back down to 28, 29. Then now it's back at 30, 36 and some change. And we haven't even touched that all-time high yet or whatnot. But it's on that trajectory. What are you seeing currently in the silver market?
Well, first of all, these near-term moves, a buck, $2, $3, they're noise. They're not music. Um, that's just the first thing to know. I don't know if you remember this, but I remember one of the first interviews that you did. You were expressing your viewers' frustration that gold couldn't crack through $2,000 an ounce. I don't know if you remember this, but I think gold was 1,800 or something like that. And I said, you know what, Daryl, I don't own gold for a $200 or $300 move. I don't move. I don't own it because I think it might go to two. I own it because I think it might go to nine. And that's how I feel about silver. To me, the difference between 36 and 34, mixed knocks. I came into the silver market in 1970 when it was a buck 20 an ounce. At the end of the decade, it was $50 an ounce. When you see a silver bull market, silver is much more volatile than gold. I don't know why it is, but here's what I know about silver. A precious metals bull market is led by gold, and the price momentum is established by gold. And when the price momentum validates the narrative around precious metals for the generalist investor, not the precious metals investor, but the generalist investor, the Fidelity guy, the Vanguard guy, pardon me, when that guy comes into the market, for whatever reason, perhaps because of the lower unit costs that silver has relative to gold, they crowd into the silver space. And when they crowd into the silver space, traditionally, there hasn't been enough market cap in the silver silo to handle the money that comes in. And it doesn't go up, it explodes. By the way, you're not going to need Rick Rule to tell you when that happens. You're not anticipating a 35, 36, $37 move. The three times in my life, the gold price has escalated by 10 times or more. I'm not saying it's going to escalate. I'm not saying it's going to go to 300. But if I'm right about the gold price, which is to say that the gold price could go up three times from here, the silver price can do more than that. When it's going to happen, I don't know. And you know what? At age 72, I don't care. I'm a healthy 72-year-old. I'm going to see it. I'm going to see it with my faculties intact. I'm going to enjoy it. I'm not going to enjoy the reasons for it, but I'm going to enjoy the thing. So it'll take care of itself.
Hmm. Yeah, and just thinking about that, I think there's still, I mean, there's opportunity in both, but I don't buy gold for like the upward movement. I put that capital into like the royalty and streaming companies and such. I buy gold for the purchasing, for the
Right.
preservation of my purchasing power and hedge against chaos. But silver, like there's still some opportunities there. I mean, especially considering that it isn't at the it isn't at the all-time high, and it could, go up at least 2, 3x,
It
and
is a
so.
huge speculative opportunity if you can stomach volatility and if you can wait. One of the things I've noticed, Daryl, as you know, I've graded tens of thousands of portfolios. Anybody who wants can go to ruleinvestmentmedia.com, list your resource stock portfolio, I'll grade it. And one of the things I've really truly learned is that while a lot of people get the strategy right, they say the price of gold has to go up and the price of silver has to go up more. Uh, and that could be a 3 year or 4 year or 5 year phenomenon. So they get the strategy right, but they get the tactics wrong. They're afraid to hold the asset class over a long weekend when they're taking on a 3 to 5 year strategy. Or they think that what they want matters. Okay, I got my silver position. Now it needs to go up by Thanksgiving. You think the silver market cares what you want? You know, so people got to wrap their heads around this. I absolutely positively believe that in a nominal sense, the silver price at least triples. At least. When's that going to happen? I don't know. I have no way to know. Um, so I don't seek to know. I just know that when it moves, it really, really, really moves. I can psychologically and financially afford the risk to wait. And the volatility doesn't bother me at all. If it goes to 36, I'm not excited. If it falls to 33, I'm not depressed. Like we said at the beginning of the discussion, that's the difference between music and noise. You know, uh, those little moves are just noise. $100 silver, no, that's more like music.
Hmm. Yeah, for sure. Yes. So pivoting to uranium, and I like to I try to be as objective as possible. I have a lot of criticisms of the Donald, but the executive order about nuclear energy and reducing the red tape around nuclear energy and such. I felt like that was like I was like, okay, this is huge. We saw a big sell-off in the uranium equities, especially after DeepSeek and the tariff concern, and they fell significantly back in April, and now they've bounced back tremendously as well. And so for me, I've had the courage to go buy when the prices were very depressed, and now I'm riding them on the way and riding them back up. So. Um, What's your take on this executive order, um, and the uranium market as a whole? And yeah, just want to get your perspective there.
Well, as you know, I'm quite critical of Mr. Trump, almost as critical as I was of Mr. Biden, but it's important to give him his due. He does have the ability to rescind prior executive orders without the approval of Congress, and he has done that. And he has also changed the culture in some of the regulatory agencies, not just around uranium, but also around U.S. natural gas. He had the ability to make a difference, and he is making a difference by himself. So it's important to note that. Uh, all of the grand pronouncements that he made and Biden made about subsidies and all that, I take that with a grain of salt. They're politicians. You can tell they're lying when their lips are moving. But the fact that they managed to permit a new uranium mine in 20 days in Utah, when under the Biden administration that would have taken 20 years, is a big change. That's a big, big change. And as I say, we're seeing that in natural gas transmission regulation. That is something that he can do without Congress. I also know from the quality of the people that they are talking to from the mining and oil and gas side to inform them on regulation that they're having discussions with very, very high quality people. And they're beginning to return economics to the analysis, not just politics, which is heartening. Um, it's hard for me to believe, but it's happening, which is a good thing. Bigger than that, though, bigger than Trump, bigger than the United States. the world, we've talked about this, the world needs more of all kinds of energy. We got a billion people on Earth that don't have any primary access to electricity. When they flip the switch, the light doesn't come on. They can't have a refrigerator because I got nothing to power it, you know? And in the next 20, 25 years, we're going to fix that. It's going to require a lot of electricity. Meanwhile, you and I want to use more electricity too. You know, data centers, artificial intelligence, electric cars, all that stuff, all kinds of energy. And uh, nuclear electricity does what many people believe is a good thing. It doesn't generate carbon. So it's become oddly politically correct energy. You know, Daryl, pre-Trump, at the beginning of the Biden administration, guys like you and me who profited on uranium, we were the bad guys. You know, we were investing in Hiroshima and Nagasaki and Three Mile Island and Fukushima. You know, we were villains. By the end of the Biden administration, pre-Trump, in the so-called Inflation Reduction Act, these same morons who hated us were prepared to subsidize us. Now, I got to say, I felt a little cleaner when they hated me. But from an investment perspective, uh, them attacking me or them subsidizing me, latter is way better than the former.
Hmm. Yeah, for sure. So, so we're still operating at the deficit. We still have that part of the thesis going for us. I'm kind of wondering about the whole clean energy initiatives. There were a lot of during the COVID boom, there was a lot of clean energy companies that were just the prices of the stocks were just skyrocketing, and then they've been getting pummeled in the last 2, 3 years, and without any hope in sight. I've been seeing some charts on X regarding solar energy and China producing a lot of solar energy and such, and I know that we talked about this before, like how much that this multi-trillion-dollar investment into like solar and wind, what fruit did it actually produce? And it didn't produce very much. It only reduced the carbon emission reliance on fossil fuels and stuff like by like I think 1% or something crazy like that. But I don't know if this narrative is kind of coming back or if there's some truth to it or what around this the thing with solar.
Well, you know, solar works on places, particularly works off the grid. Like I've invested in solar in remote mine sites in North Africa and Chile. But it's important that you invest in solar in places like where the sun shines. The idea that they're going to invest in solar in Northern Europe or in Northern Germany where the sun doesn't shine, that's just a little suspect. Covering the roof of a great big Costco in Coachella, California, where it's hot as hell, and using that power to reduce their fuel bill in the summer, running their air conditioning, that makes a lot of sense. Investing in solar in northern Mali, in the Sahara Desert, where you're 300 miles from a grid and the grid is unreliable, but the sun shines all the time, makes great sense. So I'm not against solar. We need more solar. We need more wind, but we need more of all forms of energy. All forms of energy. People point out that the Chinese are the biggest installers of solar. Great. Southern China's got a lot of sun. They're also the greatest builder of new coal-fired plants, and they're the greatest builder of nuclear power plants. So you got to put all this in perspective. See, on places like X, a proponent for something picks and chooses data to support their narrative. So if you're in favor of solar, oh, look at, gee, the future is China. They're the biggest developer of solar in the world. They still have 100 million people in China with no access to primary electricity. They need more electricity. At the same time that they're the biggest builder of solar, they're the biggest builder of nuclear, the biggest builder of coal, and the biggest builder of gas-fired plants too.
Hmm.
So, okay, it's
Yeah,
important. It's important to look at the whole math, not just the math that supports one narrative or another.
yeah, that's good. And so, lastly, before we talk about the symposium, um, the whole issue with rare earths. So I've been investing in energy fuels, and not only for uranium exposure, but also their capacity for rare earths
Yeah.
and such, and processing and things of that nature. And so and then this whole issue with the US and China around rare earths, and it seems like China has, our number on or Xi has Trump's number on this monopoly on the rare earths and such. And so what does that look like, and is there opportunity there? What are you seeing there?
I'm spending 2 hours a week studying rare earths. uh, I'm working really, really, really hard on it. And I'll be better able to answer that question in a month or so. Um, a bunch of topics. Uh, Rare earths are not rare, first of all. We haven't found them because we haven't looked for them. And we haven't looked for them because the Chinese produced them so efficiently that whatever we did, they'd kick our ass in production. That's changing. This much I know. The Chinese were able to produce very cheaply because of incredible environmental degradation in far western Xinjiang, where they produce the stuff. And the wealth in the Chinese society has allowed the Chinese population, the Chinese government to say, we're not going to do this anymore. So the cost of Chinese rare earth production, which is what reduced our incentive to look for it everywhere else, is going up very rapidly. The Chinese cost advantage is disappearing. That's important to know. At the same time that, as you point out, Xi has politicized Chinese rare earths the same way that Trump and Biden and Obama politicized the US dollar. And that means that people who don't want to be governed by Xi need to look for supply chains for rare earths outside China. The Koreans and the Japanese and the Taiwanese need to find non-Chinese sources, as do the Americans, as do the Europeans. And that means that as we find high quality rare earth deposits outside of China, those deposits will benefit both because their cost disadvantage against China is evaporating as the Chinese costs rise rapidly, at the same time that their costs associated with regulation and even the cost of capital decreases. So if you find a big, high quality rare earth deposit that could compete with the Chinese, that deposit will enjoy a better regulatory climate and a lower cost of capital at the same time that the Chinese cost advantage disappears. But you can't buy just any rare earths company. Many companies, as the rare earth prices increase, will have rare earths on the name of the share certificate, but they won't have any rare earths. They'll be looking for it. And if the price of something that you don't have any of goes up, it shouldn't really matter to you too much. So you need to find companies that have world scale deposits that the Japanese and the Koreans and the Americans and the Germans will all need so that they compete for it. You can't have an auction with one buyer. You got to have competition. And you have to have a deposit that has good metallurgical properties. And that's what I'm learning about in this next call I'm taking today, about rare earth metallurgy, so I can learn more about process like the energy fuels process that you're talking about. But I'll tell you what, if you get those two things right, and this is a speculation because it's easy to get one or the other of them wrong. If you get those two things right, you're going to make a lot of money in the next 5 or 10 years. And I don't know why I continue to do this to myself at age 72, but I really want to, I want to hit a couple more long ball home runs, and I suspect one of them will be in rare earths.
Yeah, this is one of your favorite sports.
It is. Can't help myself.
Yeah, for sure.
Greed is a horrible thing, Daryl.
And so so if I were to submit interview energy fuels to be ranked, um I know there's two different components there. Where
Yep.
would you have, where would you
I have them as a five. which is pretty good for me, as you know. I don't like their mines because they're small, and I don't like small mines. I love their permitted tailings facility and their plant in Utah. I've been around this since Orrin Benton, who was a client of mine, built that plant 30 years ago. So I know the plant well. I was there when the Lundins bought it. I love the plant, and I love the fact that they have 50 million tons of permitted tailings disposal. Even with Trump, it's going to be tough permitting new uranium tails disposal sites in the U.S. These guys don't have to permit it; they have it. I like the fact that the wind is in the sails of U.S. domestic uranium producers. Their cost of capital may, with subsidies, go sub-zero, which is pretty cheap. The jury is out with me with regards to their rare earths processing capabilities because I do not yet understand them. When I hang up with you in 5 minutes, I go on an hour-long tuition around rare earths processing and metallurgy to increase my knowledge. So I'll be hopefully, it isn't enough to be told. I have to understand it. That's just how I am.
Yeah.
So I'm not going to come out of the next hour purporting to understand anything about what Energy Fuels is doing, but I hope to come out knowing how to know.
Yeah. Yeah, for sure. For sure. Definitely. We're all growing. We're all growing and learning. Rick, let's just spend a couple minutes just sharing about the symposium. I encourage you all to click the link in the description below, even if you cannot attend in person. It is available virtually. You're getting a lot of value here. And so, Rick, could you share a little more about that?
First of all, I think you've gone for a couple of years. Uh, Anybody who attended the last 2 years and didn't make money, it's their fault, not mine. I mean, everything we said was going to happen happened. And if you had bought a representative sample of our exhibitors for the last 2 years, you wouldn't need my encouragement to come back. It would be your own greed that was propelling you to come back. So let me tell you a few things about the conference. First of all, it's been going on for about 30 years. I don't actually know how long because I'm old and my memory fades. But we do a few things right. We have great big picture thinkers. And these guys aren't like online influencers or politicians or journalists. Guys like David Stockman, who literally wrote the book about the budget, will talk about the budget. Nomi Sachs will talk about, no, Nomi Prince, pardon me, talk about corrupt nature of Wall Street. Not a journalist. She was a partner at Goldman Sachs. Daniela DiMartino Booth will talk about the Fed because she was a Fed researcher. These are people in a biblical parlance that talk about those things from the belly of the beast. They were part of the system that they talk about. We'll have analysts and portfolio managers who aren't Johnny come lately to the resource spaces, but rather people who made money there for the last 3 or 4 decades. We have, well, let me cut to the chase. Whether you attend live or via live stream, we're going to give you 55 hours or so of programming, which is more than you could absorb in the 55 hours we give you. So we're going to give you access to the recordings so that you can refresh your memory for a whole year. And in addition to that, I interview every single exhibitor and every single speaker before the conference. Whether or not you attend the conference, actually, you can go to the Rule Classroom or go to the Rule Investment Media YouTube channel and have the advantage of those interviews. But if you go to the conference, you arrive at the conference already prepared to make the most of your experience and make the most money. But here's the truly cool thing. Whether you attend live or via live stream, our conference has a full money-back guarantee. If you think for any reason, whether you attend live or live stream, that you didn't give your money's worth, I'll give you your money back. So it's a transaction that has no financial risk. Try and find some other aspect of your life other than shopping at Costco where you got no financial risk and you can't do it. The only investor education product that I know in the world that comes with a full money back guarantee is our Natural Resources Investment Symposium.
Mm-hmm. Yeah, for sure. And having been there in 2023 and then going in 2024, I saw from just I didn't have any numbers, but I saw a significant amount of more people in 2024, and so I'm imagining that we're gonna have.
We're continuing that. The on-site attendance this year will be about 50% larger than last year. But importantly, the live stream attendance, the group of people that attends online, will be more than double last year.
Wow. Wow.
There's people, I would encourage live attendance because there's a lot of communication that's nonverbal, you know. But if you can't do that, last year people from 33 countries attended via live stream. If you can't take 5 days out of your life to come to Boca Raton, Florida, I get it. We serve you too. We've invested thousands and thousands and thousands of dollars making live stream a better experience for you. And as I say, if for any reason you feel we failed, we'll give you your money back. By the way, we're not going to fail. We've had to refund in 30 years less than 0.1% of the tuition we've charged. But that guarantee is your guarantee that we bust it every minute, making that conference worthwhile for you.
Yeah, for sure. Well, you all be sure to go click the link in the description below. Thank you, Rick, for coming back on the show and everything. Looking forward to catching up with you next month. I know you're going to be busy. I'm going to be busy, but we're going to connect at some point. And yeah, I'm always happy to have you on.
I look forward to hosting you in Boca Raton. I appreciate you hosting me on your show. So thank you.
All right. No problem. All right. Take care.
Thank you, sir.